statement. So I have it laid in front of me. So I know that's a piece you guys cannot see, but that is something you would need. And then obviously our QuickBooks file. And I write and highlight on my bank statement. So sometimes I don't put everything in every week. And when I download the transactions from the bank account each month, I'll catch a few things that didn't match. The biggest thing I focus on when I'm doing mine is that anytime I cut a check, I'm putting my check in QuickBooks, if I'm not printing it out of QuickBooks already. And then also to make sure that my deposits, because I use a portal that syncs with QuickBooks, that my deposits that are depositing into the bank account match what's showing in QuickBooks. And even one step farther, making sure that my software is actually marking the invoices paid on the other end with my customers. And I have to use a syncing feature for that. So I then have to sync that. Pending what you guys use for processing or payment gateways and stuff, there are some things you can sync into QuickBooks. For example, Square is a very common credit card processor. I don't do a lot of credit cards, so I just manually input my Squares. But if you do like big events, charities, stuff like that, you do a lot of it. Square has a plugin that you can pay $10 a month for, and it will sync directly into QuickBooks. Now, I'm not going to teach you how to set that all up. It involves some mapping on the back end, but just know that pending what you're using from a POS perspective, there is options to sync it into QuickBooks. And then again, that would be something you have to make sure that's synced before you do your reconciliation. Okay. And that goes back into what we covered last week, which was, downloading the transactions, categorizing the transactions, and making sure that they're getting entered and matched properly in order to prepare again for the reconciliation. So what I did before is I downloaded a month worth of transactions in my bank account in our sample file we've been using all along, and I got it ready to reconcile. So we're going to go through a month of reconciliation for the bank account, and then we'll kind of go through the steps and go a little, repeat some of what we did last week, which is we're going to download a credit card. I only have one credit card that I use that has like 7 transactions in it, so it wouldn't take us very long to do. But it's just going to be seeing those steps again as we're kind of going through it. Okay. And then I mentioned having the printer and the paper. So when you're done with your reconciliation, there's a report that you can print at the end, that you can print a summary, a detail, or you can print both. This is a preference on you as a business owner. I have some clients that never want to see the report. As long as they know it's reconciled, they could care less. But I do have other clients that want to see the detailed report because it lets them know on the detailed report what has not cleared yet based on checks that they would have cut in a previous month. So a lot of times when you go through a reconciliation, you're just kind of moving through the motions. You're more focused on matching the dollar amount and the month than necessarily paying attention to what didn't clear. But you'll learn by doing your reconciliations the vendors that hold checks, because like I know in a couple of my clients in the dental industry, the ones that hold checks are the ones they hold them a month. Then sometimes the vendors are sneaky, and because they didn't put that check on their system, now my statement shows up and it shows I have an interest charge, which I don't have because I paid the bill in time. And it's just their system automatically generates that. It's not that they're trying to do anything wrong, but they're my check holders. So then I have to go back and go, I cut this check 2 weeks ago. You haven't cashed it, yada, yada, yada. And then obviously it plays into the unclaimed funds that Ohio requires us to file each year. And then we have to try to make sure that everybody does cash checks. So it gives you kind of, your checks and balances in the world of this. So this is like one of the most important things. And I recommend you should do this every month. If you do nothing else as a business owner, you need to reconcile every month. And the reason for that is because you're checking somebody else's work. Like this would be an area where you could find if somebody was cheating, like doing fraud on you. Like, and you'd be like, well, I haven't signed any checks I don't know about. Well, people are sneaky, and I've seen it because I've caught it. But like they'll pay their Spectrum bill and your Spectrum bill, and you as a business owner are signing a check to Spectrum. So you don't realize that that's not just your bill, right? But if you're doing the reconciliation, you're going to be paying more attention to what the dollar amount is and less attention to just the vendor. And so you're going to be like, why was my Spectrum bill $600? Well, because you're paying somebody else's bill, right? And you can catch it. Or if they cut more than one Spectrum bill in a 30-day period, You can catch it that way because you're going to start to see it. So sometimes our people that help us get us when we're really busy and we're just like, oh, we got to get this done for them, and we're just signing our name everywhere, which is important. Don't, sign your name on everything, but we do still need to have that checking system on the other end. I see that a lot more in big corporations where people can get away with that, quote unquote, the Enrons of the world. It still happens, maybe not at that magnitude, but I do still see it happen. And I have a lot of clients that have been wounded in that world. And so you want to really make sure that you trust the person you're sharing your information with, but that you're also doing your due diligence and checking them all the time. Okay. So let me go ahead and share my screen. So this is our QuickBooks file, like I told you guys about. So from our home screen here, we're going to do a couple things. We're going to work backwards, and we're going to create an invoice first, which I don't have any created in our sample file. But I do have a couple clients that I know their dollar amounts to make sure that we can make a dummy invoice and then mark it paid and do the steps. Okay. So from here, there's a couple ways you can do this. You can go to customer up here in the top, and you can go to create invoice, and it gives us our lovely screen here. And then I'm just going to say that I'm the person that we're creating the invoice for. And then we're going to date this backwards. Say this was due on September 2nd. And then if you've never created an invoice in QuickBooks before, it starts at number 1. I never recommend starting at number 1, because we don't want anybody to know that you're inexperienced. So you always start at like 100, 1,000, whatever it is, and then let it grow from there. So here I'm going to just put my information just for, proper purposes. Okay. And then my terms are they're due upon receipt for almost everybody. I have one client that's net 15. I bill him on the 1st. He's due on the 15th. But most of my clients either pay the 1st or the 15th, and they're just due upon receipt based on the bill that I create. Okay. And then there aren't going to be any items in here. We'll talk about items a little bit later, so just bear with me. I'm going to bring this over here. Okay. So then here is where I would put, like, because we're talking about monthly reconciliation. And then pending their package. And then another service I sell is payroll. Okay. And so their total bill is $335. Now, down here, we have some options. It's been a pleasure working with you. Please remit, whatever. You can also type in here. So what I do is thank you for your automatic payment. Okay. And then that way they know that it's been paid, other than that it comes with a paid stamp later. So you can put, please make payments payable to Bell Solutions LLC, mail them to whatever your address is, that type of thing. I have letterhead that I use personally. So my letterhead has the logo at the top, our address at the bottom, and my email address. So I don't have to type it all out, but you are welcome to put anything in this message that you would like and make it custom, so that it's more personal to you. That's one of the customization features of the invoice. And so we're going to hit save and new. And then it's going to, I added a billing address. Great. So anytime you edit something on here, you're going to get a notification. And then that we set up terms for this person. And these terms will stay here now moving forward. and then we're going to hit OK. And then I'm not the best speller in the world. I do numbers for a living, so I always have my spell check set up. So we're going to head and replace that. Sometimes it thinks that abbreviations are wrong as well, and that's obviously not always the case. So the spell check is just like any other spell check, not perfect. So now we're back to a blank screen where we had created the invoice. If you notice, the invoice number here went up by 1. The date stayed the same. So if you don't log out of QuickBooks and you're working on a date from the bank reconciliation, everything you do until you change the date is going to stay at that date. So always pay attention to your dates. And then up here, you'll see where you can go to find, which will bring up a bubble here where you can search for previous invoices. Okay. And then you also have arrows up here that you can go back and forth to be searching. When you don't have a lot of invoices, the arrows are great. Or if you know you're working on one that's really recent, like we only have the one in here right now and we created it today. You know, the arrows aren't a big deal. If you have hundreds of invoices each week or even, 30 invoices each week, it gets a lot to flip back and forth. So you'd be better off to use your find. Okay. Now I charge flat fees each month so the business owners can budget. That's just for me. But what that means is that my invoicing each month after I've created the initial invoice like this is really simple. So if you look up here, you have a button that says create a copy. It says there's a duplicate invoice that's being created for this. Now it adds a new number and then I can date this to October 2nd. Okay. My terms are still the same and all the information is there. And if I hit save and new, and now I go to find these invoices, right? Now I have 2 invoices here to me. So instead of having to do it. So if you sell a lot of the same product that's exactly the same pricing to a customer over and over again, don't be afraid to make a copy instead of doing all the work. It's doing the same thing. If you have inventory, it's going to adjust inventory. It's going to create a new invoice number, but it takes you or whoever is doing your billing, 5 seconds instead of searching and flipping back to see what verbiage you used the last time so that it's identical, yada, yada, yada. You can also do where you create a copy, but you can change the vendor. And then it still keeps my information here. Now I just have a new customer here. So if you are selling the same thing to a different customer, again, you can save the time and add the, select the customer from your drop down there. Okay, creating an invoice. Now there are from that screen. Now the other way you can create an invoice is if you go to create invoice from your home page and it takes you to the same screen and you have all the same features you had before. Okay. So I'm not going to go ahead and create another one because these are all the same buttons and we did that. But just so you know, you can get it from customer, create invoice, or you can get it from create invoice here on the home screen. The second thing we want to do is now marking an invoice paid. And again, there are 2 ways to do that. So if you follow it from here to create invoice, you follow your little arrow. Here's where it says receive payments. And then this is our received payment screen. So this is where once you've invoiced everybody, and you only use the screen if they've actually been invoiced in QuickBooks. You invoice everybody and you want to say, oh, okay, so Ann paid me, right? So Ann paid me. She paid me $335. Okay. Now, what type of payment was it? It was a check, but they have e-checks, debit cards, cash, and then there's more. More. Oh, it's not going to let me. There it is. Okay. More gives you gift cards. You can add a payment method if you actually use credit card processing. I don't, and I don't recommend it into it. It's just expensive, and you can get a better rate with a third party. You can also add other methods. So I use a bill and pay portal. That's what my clients pay through. Or I use Square. So I have bill and pay and Square listed in here. Okay. And then that way, when you see it on the deposit, it'll show you where the payment came from so that you know how to look for it in the bank when you're starting to look at that stuff. Okay. And then, so we're going to go check for this purposes. We're going to say it was check number 255. And we're going to say that we got this on September 30th. Okay. So I'm going to go ahead and hit save and close. So where does that money go, right? Now we've marked the invoice paid, but you haven't put it in the bank account yet, right? So now the question is, where's the money go? If you go to reports and you look at company of financials and you look at your balance sheet, you have what's called an undeposited funds, and that's where the money goes until you actually make the deposit into the bank account. So if at the end of the year there is any money in undeposited funds, it needs to be looked at. Now, sometimes this number is positive and sometimes this number ends up negative. And when it ends up negative, that means that you have deposited more money than QuickBooks thinks you received. And that usually plays into when you've marked an invoice paid in January instead of in December when you actually received the money. And so you have to pay attention to this because at the end of the year, if this number is not correct, I mean, if it has a couple $100 in it positive, your accountant's not going to care. But realistically, it should be zero all the time. Once you've done your bank reconciliation, there should not be anything left in there. Okay. So again, where the financials that we talked about in the first week play into where we're at now. You're constantly going to be coming back and forth, okay? The other thing that you'll see is that we created that copy of an invoice, which now shows up in my accounts receivable. So now I know how much money I'm expected to collect based on my terms. It could be 30 days, 60 days, 90 days, right? But you can see that on the balance sheet as well. So I'm going to X out of that. So we received our payment this way. Now, the other way we can do it is if you go up here to customers and you go to receive payments, and you're going to get the same screen here, okay? Now, if you receive a payment and it's not right, or we end up going back to edit it later, which happens, don't panic, it's totally doable. Again, you have the find button up here where you can find the customer. And you can click on all of this stuff and it's going to take you wherever you need to go. You also have arrows where you can flip back and forth to see the deposits you already made. Okay. If you needed to edit it, you have a delete option or you have unapply payment. Those are your two options. You cannot delete a payment if you've made the deposit. I'll show you that once we do the next step. Okay. So you do have some options up here with all of this. I'm going to hit save and close because we already made the deposit we need for right now. So let's go up here to actually making the deposit. So again, you have two ways to do this. You have from received payments, you follow your little arrow here to record deposit. And he's going to bring up a screen that has a pop-up box. Okay. So every time you mark an invoice paid, before you make the deposit, QuickBooks is going to create a big long list of them for you. And then these are clickable. So you can sort by what type of payment, the date of payment, those types of things. And then obviously you can just do it by amount that matches your bank statement. So we're going to just select the one we have because this is the only one we're going to mark paid. But I do have a deposit that is this exact amount that should be in my bank account. So I'm going to go ahead and hit OK. And now it brings me here where I have to check which bank it's being deposited into to make sure it's the right one. Okay. Check the date so you know exactly what date it should be. And this should be on the 16th is when this deposit was made. And then you can see who sent it, where it's coming from. If you need to write a memo, like customer payment, bought a t-shirt, anything like that. It has their check number that they gave me, the method they paid, and then the amount. Okay. So this screen is very important because again, this amount at the bottom has to match what shows on a bank statement somewhere. Otherwise, it defeats the purpose of what we're trying to do. Okay. You also can print this up here and you can do the deposit slip. So if you order trifold checks that are on a normal piece of paper size, they normally come with a stack of deposit slips. And so if you're going to print deposit slips through QuickBooks, it's really important that you determine what item this is. And the reason for that is that on deposit slips, it asks for a total cash amount, and then it asks for the list of the individual checks. And it's going to print the name of the person, the check amount, and the check number, and then it's going to print the cash totals. And when you take it to the bank with your deposit, it should all match, and it makes your bank trip a third of the work that it used to be, because you don't have to handwrite everything. Because if you handwrite it and you put it into QuickBooks, now you're doing double work. Okay. So I recommend doing it. If you're not that sophisticated, or you have, I mean, I don't have very many deposits myself, but if you don't have very many deposits, I can understand if that's not something that you want to do, but it is something to kind of pay attention to as well. And then obviously we check the date, we know it's the right bank, this information is correct, and the total matches. So I would hit save and close. If you have multiple deposits you're doing because you waited a week to mark them all in QuickBooks, you can hit save and new, and then you have the ability to continue going. So now let's do the deposit the other way. So if you again go up to banking and you go ahead and make a deposit, this is the same screen. We didn't get the pop-up box because I don't have anything marked paid. So that should be your first cue if you're trying to make a deposit and something's missing, that either it's on another deposit or that you didn't mark the invoice paid yet because we didn't get the pop-up box. And again, you still have navigation bars up here, previous, next, everything like that. Once you get it deposited, what you see in this screen is a little bit different than what you saw before. But it just all is here, and you just pay attention to it. And then obviously if you need to accept a payment, the pop-up bar didn't come up because there are no payments to deposit. So this is another warning you get if that's what you're looking for. Okay. I'm gonna hit save and close. And then if we go into the bank account, let's scroll up here. This is the deposit that we made. So A, because of the date we selected. B, it doesn't have a little lightning bolt here, which is how you know it was deposited from or downloaded from the bank account. And then C, this is the same dollar amount. So that's how you know what transaction it was. Okay. So you see that it went into the right bank account, it increased my bank balance, and the list goes on. So it's moving smoothly through the process. So now we've created an invoice, we've paid an invoice, and now we've made our first deposit. So now let's look and see what this does with what we downloaded from the bank account when we go to do our reconciliation. So I'm going to right click in here. This is the first way you can get to a reconciliation, and see where it says reconcile. And then you get a box like this. Okay. So since this is a starter folder, it doesn't have a beginning balance, but there are a few things that are really important that we pay attention to on this screen. A, that we're looking at the same statement that it says right here. B, that the date here is correct. We're going to reconcile the end of September, so that is correct. The beginning balance should match the beginning balance of the bank statement. If it doesn't, something's changed since the last time you reconciled. I put a beginning balance entry in, so this will reconcile for us today, or should reconcile for us today, but it says 0 because this is a file that we've been piecing together, so there isn't a previous reconciliation. And then your ending balance, which will be whatever your balance says on your statement at the top. Okay. I have a lot of business owners that think they can just print their summary that you can see when you log into your bank that shows all your transactions and that you can reconcile from that. You can't, it won't work, it will never match. So you still have to actually print and pull the bank statement. It's really important that you do that. Otherwise, you'll drive yourself crazy trying to figure out why it doesn't match. And I don't understand why on the 30th, what that balance is versus what the bank statement is different. I'm not sure. I just know that it doesn't match. It's never matched, and it drives people crazy. Now, there are 2 ways to enter service charges from the bank and interest earned. Okay. So you can do it from this screen. Just make sure you tell it what account to go to, and it will remember. If you do it this way, it won't remember the dollar amount, but it will remember the account you used prior. Okay. And then you can also just enter it with your downloaded and then you don't have to put it on this screen. That's a preference on you. There is no right or wrong. It's capturing the expense whether you do it this way or you do it directly in the bank account. That's up to you guys, and that's more of your preference. You also have the ability to try to locate discrepancies if you realize that your beginning balance is off. You also have the ability to undo a reconciliation. You can undo as many as a year before QuickBooks really starts to bug you about it. If you hit undo, it's going to say, are you sure you want to do this? Yes. Are you really sure you want to do this? Yes. Like, so it gives you 2 pop-ups before you undo it. And then you have the option to fix whatever the problem was before that. If you notice it's just something that got unchecked, you don't necessarily have to undo all the reconciliations to fix it. You just have to know exactly what happened. And then you have your continue button. So if you hit continue, it won't let you go unless you enter an ending balance. So my ending balance, based on my bank statement here. So then we get this screen. Okay, so this screen is going to be on date order, all the transactions, and for efficiency purposes, because I wanted to make sure we had data to actually do a reconciliation today, I didn't enter in payee information, I just classified things. So if you don't mark a payee and you just do a classification, and what I mean by that, you just categorize the account, it's going to capture the expense, but you're going to be here and you might be struggling if the amount is the same on 2 things to figure out exactly or what's happening. So I do recommend you fill in payees. So ignore the bad habit for just the training purposes. Just make sure you do that. But again, it's capturing the expense regardless. Okay. Then the other thing I look at is I want to make sure I filter by amounts. I'm making sure I don't have any like duplicate transactions. Like these are the same dollar amount, but they're 15 days apart, so that's okay. So I'm always checking to make sure. It's very rare I have things that are the exact same amount that are within a day or 2 of each other, let alone the exact same amount at all. Here's 2 again, but this is rent payments, one the month paying the next month, so that's not a problem. So everything in there looks really good. So now I'll filter it back by date so that I can follow it along in the bank statement. And then I do the same thing on the income side. So our deposits are a little funky. I got 2 $200 deposits. That's interesting. They're the same day. I would say we might have an issue here. There might be a duplicate there. So I'll find out as soon as we actually do the deposit. Though I do have more than one client that pays that amount, so it's not a huge deal there. But here's our big one. We marked a deposit paid, and then the bank account synced a deposit in before I marked it paid. So now I have 2 deposits for the same amount that are going to be, this is going to be a duplicate. And I did that on purpose so that you guys can see how important it is to have your deposits in before you download the information from the bank account, because this is where you get duplicate data, which we obviously don't want. Your bank statement will show you duplicate data, but it's really important that instead of marking this one in the bank reconciliation, which is the one that was downloaded from the bank account, it's really important to mark the one that we actually created that gives us the detail here. Okay. So let's go ahead and go through this reconciliation. And again, I'm going to flip these back to be by date so it makes it easier. And let's look here. I'm going to flip this a little bit farther over. So you can't see the bank account that I have on the other screen just because I can't show 2 screens. It's not super important that you see what the bank account is. It's more important that you guys see what the software is going to be doing to track everything. So in here, if you start clicking on everything, it's going to turn green or gray, and then it has a little check mark here. That's how you know it's been checked. And so we're going to go down the list here. And what I'm looking at is, I don't care so much about the date as long as it's in the current month, because what you put it in QuickBooks as and what the date the check clears might be a little bit different, but I do care that the dollar amounts match to the penny. So I'm checking all of the dollar amounts Check numbers, I'm checking the check numbers because that's important, making sure that those are proper. Okay. So then that gives me a total payments of 14,924.76. And on your bank statements at the top, it should tell you total deposits versus total payments. So this number should match with whatever's going on in the bank account. And then so down here, you can see my total deposits, and then you can see I'm off $475.15. So this 200 is actually in here, and then I'm missing another deposit for $275.15. So this is then when I go back and I'm going to look at my statement again to see if I have missed anything, but I'm also going to check my numbers again. And this 275 on for this situation may be part of the beginning balance, but I'm going to double check it, and go through. The other thing I do is on my bank statements on the paper that I'm holding in my hand right now is I have a highlighter next to me, and I usually have a ruler. And I use the ruler to scan down the sheet so that I can keep my eyes against the right transactions. And then I have a highlighter in case I go down and I'm missing a transaction. Okay. So like for some reason the bank maybe thought it was or the QuickBooks file maybe thought it was a duplicate or it didn't match properly. So I highlight anything that I would be missing so that I can see what's going on, and then go back and enter it. So right now I'm missing a $275 deposit and 15 cents. I see that it is my beginning balance that is off. So my beginning balance entry is this one. So I can double click it and then add in this to make the beginning balance right. And then that changed this number. So if you notice something is wrong or the account is wrong, you can click on these and edit them, change them, whatever, hit save and close, and it's going to leave you in your reconciliation screen. Okay. Now, my difference at the bottom is 0. It has to be 0 in order to complete the reconciliation. This is the area I see the most issues with, is that a business owner's like, oh, I marked everything that's cleared, blah, 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 and then they hit reconcile, and then they have a huge bucket of reconciliation discrepancies at the end of the year because it didn't actually match. And it just goes into paying attention to the things on the screen before, the beginning ballots, the ending ballots. Excuse me. Making sure the difference is 0, making sure the interest is in, making sure that you select the right transactions. That's very, very, very important. So those all play into it, and you want to always make sure that this is 0. This is 0, so we can hit reconcile now to complete the reconciliation. I'm going to show you a few things before I do that first, okay? You have the ability to modify the reconciliation if you realize that you made an inversion error. So, for example, instead of 842127, maybe you did 841272. It happens in your brain when you're typing, especially keys that are going to be right next to each other. Sometimes you hit it differently because your brain is trying to tell your hand and you're moving a million miles a minute. So don't panic. If you realize, I find this a lot if I realize my difference is off. What I do is I unmark everything. So I will unmark everything and then I go through it again, right? And then if it's still off, then I start looking at, well, what's off? Is my beginning balance off and I just missed it? Because then again, it's the way your body looks at it, and our brains only work so fast. Okay. So you have to pay attention to those things. The other thing you can do is if you're determined that it's perfect, that nothing is wrong, you can hit mark all. And then, for example, we're off $335. We know it's this deposit. And now I've done my reconciliation in about 2 seconds. Odds are we cut checks and stuff that don't clear right away. It's not going to be that simple. But I do see on some entries that I do do annually and that type of thing, that I can do a reconcile all at some point, because it does work. Especially if I know that for a fact that all the expenses and income are in. Okay. So I'm going to go ahead and hit reconcile now. And then this is where it shows us the report options we have. So it says, congratulations, your account is balanced. Woohoo. So I was talking about, you have the summary or you have the detail or you have both. I'm going to display both so we can look at it. So this is the summary. The summary shows you the same thing the bank statement shows you, that you have this many checks that are cleared, you have this many credits, and that you had one deposited item, and that it equals, this is your cleared balance at the end of it, okay? This I keep no matter what happens, just as proof that the reconciliation was done. And I print this out and I attach it to the bank statement that I've printed out in order to keep the records clean. And then obviously, if something ends up being wrong moving backwards, then I can look back at my reconciliation reports and see when I reconciled it to figure out what could have happened or who was in the file, to do my due diligence on it. Okay. So you do want to staple at least a minimum of this sheet. So that's the first one. And then I'm going to X out of that. And then this is the detail report. So the detail report shows you every transaction again that you just did in the reconciliation. So if you want to see this information, I just think it's repetitive because you have the bank statement in front of you personally. But again, if you are having somebody else do your reconciliations and stuff starting to build up in the bank account that isn't clearing, then you obviously want to pay attention to this, and you probably want this printed out a couple times a year, maybe once a quarter, just to kind of spot check it. Again, just so that you can make sure that it all flows the way it should. So, okay, so then there's that report. And if you decide to print both, just staple them to the bank statement. It'll make it easier for you. Okay, so then let's look at, now we're back in our bank account. And if you look in our bank account, now instead of having the little lightning bolts that we've had from them being downloaded, now we have check marks. Okay. So what can happen that you can mess up a reconciliation is, like, you click it just right and it's like, do you want to unclear this? And you just click yes because you think you want it to go away. And now it's gone. So now if I go back in, and it'll say QuickBooks will let you do this, but I don't really want to, right? And so now it put it back because it warned me a second time. And I was like, well, maybe this is something I don't want because it's warning me again, right? QuickBooks warns 3 or 4 times. So if there's something that's funky, it's because we were busy and just click happy is what I call it, instead of actually getting some of this stuff, done. But we have the ability to prevent it. Now, if that were to happen and you were to undo it all the way, that transaction would show back up in your reconciliation. And instead of undoing your reconciliation, you could just select doing your next reconciliation, because the expense is still in here, which is the important part. Because realistically, if you use QuickBooks properly, this bank balance at the bottom is the cash you have in the bank. I don't care if your bank account says you have 50 grand. After the check's all cleared, this is what you have in the bank account. So if you use it and do it and keep up with it, and for me, I keep a couple $1,000 kind of floating. That's my monthly transactions that I put in each month. I just put an entry in and drop it to the end of the year so that balance is still showing that those transactions have cleared, but my bank balance is accurate, so that I know if I needed to pay something on the fly, I've got the money to pay it on the fly. Okay. So that's reconciling a bank account. Now let's add, I'm going to create a new account here. I'm going to do a credit card. Okay, and then let me get logged in here on the other side. And my bank wants a security code, per usual. And then okay, so I'm going to download quite a few months of the credit card just so that we get some transaction history here. Since I don't use it very often, it won't take us very long. So remember this box from when we download that it wants to create stuff. And then this is the first time we're syncing it, but I already created the account. So you want to make sure you tell it where to go. And then it tells me my data's in here. And then that I have 32 transactions. So the other thing to think about, and it's not going to matter right now because of the way I synced this data, but these that are payment transfers, these come out of my bank account. So if you pay a business credit card out of the business bank account, when you put those transactions through one or the other, they're going to match on the other side. So again, you don't have duplicate transactions. So pay attention to that, obviously. And then everything in here, like we talked about, is clickable. So let's do this is office supplies. This is a payment out of bank account. This is interest that was given back. This is interest that was charged. This is shareholder and then shareholder. Okay. So then I'm going to go ahead and add these. The 6 of them are added. And then let's go back into our home screen and go to reconcile. Actually, I'm going to take you this way. If you go to banking, you can reconcile credit card here. So it does the same thing. And then let me pull up my statement here. And then let's see here. This was our statement date. Ended 9/17. So let's change this to 9/17. And then the balance was 0. So then of 9/17, it shows these transactions. And it says I'm off 19 cents. Oh, probably that one. Is that on there? Nope. Okay. So then it shows I'm 0. So I have a 0 beginning balance because I pay it off every month. So I should always have a 0 beginning balance, to be honest. And then I had 2 payments, 3 charges, no finance charges, and then the difference is 0, and you would hit reconcile now. Again, here's our option for the reports, and then you can hit print. I'm going to hit close because I'm not going to print them for right now. And then that, so that option that this doesn't need to be here. It's a duplicate funky one. So I'm going to hit delete, get it out of there so that my credit card is zeroed, not a negative balance. Okay. So those are kind of some of the things that you pay attention to with that. So that's how we reconcile bank accounts, credit cards. That's how you create an invoice, you mark it paid, and you make the deposit, which play into the reconciliation. Now let's go a step even farther backwards and talk about the items that we're creating and editing on the invoices. Okay, so up here, again, our navigation bar is our list, and then we're going to go to our item list. And then these were the 2 items I created when we were doing the invoice. But if you look down here, you can create a new one. And when you do a new one, these are your options. So I'm service-based. Everything I offer is a service. So I'm going to have everything under service. But you have a non-inventory part that you can have, which is something you turn over rather quickly, not something you hold on to for more than 30 days. You have other charges that you have, subtotals, groups, discounts, payments. Okay. So you're going to use discounts for sure. I call it just discounts. It's not a sub item to anything. I don't specify a percentage because my packages vary so much that I don't know. So I leave that at 0. And then instead of going to income, I'm going to create a discount account that is income, and I would hit OK. So now you have another account here. This whole page is clickable, so you can change it by name, change it by type, change it by account, everything like that. If you need to edit something, you just need to click on it, go down here to this item and hit edit item. And it gives you the same stuff we have. The only thing you cannot edit is the type it is. So if you created a service and you didn't want it to be a service, you actually have to delete or inactivate the item and then totally recreate it. You cannot go backwards and change that type of thing. You can add notes and custom fields. The other thing to talk about is that this internal item name we see as the person creating the invoice, not the person that's getting the invoice. What they see is the description, okay? So if I hit OK, because I made that edit, right? Now, if we go to customer, create an invoice, and again, we're going to do it for Anne. I'm going to enter payroll. The customer sees this information. And the way you can see that is if you do this, you can hit preview. Let me drip this back over here. You see the name and then you see the payroll processing. So they don't see our Q codes, which are the item names, but they do see a description. So if you're selling hardware parts or nuts and bolts and stuff like that, you might have a SKU code that you're going to use that could be T95671, right? And they wouldn't even know what that is, but you need to know from an inventory perspective. Then you pay attention to that, and then you just write in the descriptions, you know, lug net nuts or whatever, lug head nuts or whatever they are, and you can pay attention to that. Or if you're selling cookies, like maybe your cookies have a specific brand, right? I don't know. Sugar cookie to me is generic and anybody could know that, but there might be something that's specific, and you might say 2 dozen sugar cookies and then the rate is $12 a dozen, and so the quantity here would be 2. It'd be description, the rate, and then the total amount. Okay. So this is just the generic template that QuickBooks automatically creates for invoices, and obviously we have the ability to adjust any of that, which we'll get in the expert course. I think it's the last class when we're talking about, you know, dotting our I's and crossing our T's, and the last few things that QuickBooks has the ability to do. We'll go over how you can edit this because you can custom fit this to fit any letterhead. But there are other layouts, like that's just the generic layout. You have packing slips and professional invoices and stuff like that. And I recommend playing around with it on what you want them to look like. So here's a professional view. Just doesn't have a quantity, which is fine. That's up to you guys. But invoice all the same type. So the only time I see the people use more than one invoice type is if there's 2 companies technically running out of one. And they'll have, for example, Zen Industries, one of my clients, they have a Zen company and they have a doors company. So part of it is sheet metal, part of it is doors. So she creates 2 invoices. One is a Zen invoice and one is the other side invoice. And so she has 2 templates that we toggle between for her purposes so that it looks the way it needs to for the customers pending the job. Okay. So you know, if you have something like that that you need to see separation, great. If not, from a uniform perspective, create a template, name it the template that you need to that use me, whatever it is, make it kind of dummy proof. And then that way everything looks the same, especially if you go through the time to customize it. You want to make sure that it's gonna not be funky when you go to print it and everything like that. Okay. So we'll hit save and close on that. Um, and then you can obviously do rates and stuff in here. So let's create another one. We're going to do a non-inventory part. This gives you the ability to put a manufacturing part number in. That's for ordering purposes. Again, they don't see that. So let's do, and their part number is, okay. And then I'm going to say, oh, this is out of my, I'm going to just put nuts and bolts again because I don't actually know the name of any of them. The price of them is $12. And then we're going to say that this goes into, we'll just call it consulting income. Okay. Oh, I hit cancel instead of save, guys. Sorry about that. Try this again. This is going to be $12. And then we'll hit OK. So now it's in here. And again, let's go back and look at let's create an invoice with it. So now 24 times 12 is 288. Okay, it says nuts and bolts. So this can be anything that's shorthand for you that makes it easier for you to be able to see. Just want to make sure that we get it, you know, get the list building, and as you get more detailed, you know, you see the more detail there. Do we have any questions about adding or editing an item here?
No, not yet.
Okay. So let's go back over here to banking, and then let's look at the deposits again here. So an item list and they mark that invoice paid, that information doesn't come all the way through to see on a deposit. That's more internal use for you to know what you're selling. And it's going to do, if you go into your reports, company financials, and do profit and loss, everything we show in here is so far for income is consulting income. But you might have, you know, hardware or parts versus consulting versus payroll versus taxes, whatever it might be, right? And that's where it starts to get rather large. So in a month, these are the expenses. We talked about those last week that I went over. And then obviously the paychecks cost that I pay. So it's not a very big financial statement, right? Like we were talking about, simple is better. But you do have the ability to make it more customizable. And I would say this is probably a little over a half a sheet. So if you wanted to add in other income items, like I showed you guys originally the first class, I like to see 3 or 4 of my income levels. Training versus packaging versus taxes and payroll. So I have 4 incomes total that I track. And it's honestly to see how even my business is distributed through my areas of expertise, and to determine if it's worth the stress/support to maintain those. For example, taxes, I do them for people because most of them are clients or friends. But it's not worth the stress for me to grow that business very much more. I'd rather help out and, you know, other accountants and their needs instead of trying to build that area myself. But again, I'm not, you know, if it's a client, I'm going to help them and do what we need to do so it grows. But it's, you know, the little bit of money that it makes me each year is not worth the amount of stress or lack of sleep I get in April and October, in my opinion. And that's a decision as a business owner you have to make. And then obviously the same goes for, you know, other areas of income. So 90% of my business comes from the package side, which is doing the actual bookkeeping services. So I know that's a solid side of my business, and that's the moneymaker for me, because hiring somebody outside is cheaper usually than hiring somebody internally. So, you get to watch that. But for you guys, your moneymaker might be concrete, your moneymaker might be cookies, your moneymaker might be, fundraising. And so you just have to determine which one. And then you get into more detail. Well, do I want to track the fundraisers that I'm doing? Because if I want to track them, which ones do I want to track? I can't track them all, but which are my 3 or 4 big ones that we do each year? And really kind of detail that out. Now you can see it if you go into items. You'll be able to see your big money makers based on the history in each item. So if you need to do it that way without creating hundreds of incomes accounts, but you obviously have the ability to do whatever we need to do with that. Okay. So that is actually that's pretty much everything we had covered today, based on what we're trying to do. What I would like to do a little bit differently today is that I know that we're on the call, but we are kind of in the middle of a month, and I'd be curious to see if anybody has reconciled their bank account currently, and if they haven't, do you feel more comfortable about reconciling? Because I would recommend that when we end early, that we use the time to practice some of the skills, because we've already got the time marked off. Going through it, and I really anticipate time for questions and stuff like that as we're going through it, as this is a pretty detailed oriented class that we're covering today. The 4 steps you have to do are very important. So I want to open the floor up for questions before I do the last few things we want to cover. And then obviously make sure that everybody's done their reconciliation and see if there's any workarounds that anybody knows. So I'm going to open the floor up for a few minutes, Steve, and give people an opportunity to kind of chime in.
Okay, and I would say that because of the size of the group, we'd be happy if you unmuted yourself and asked a question. If you'd like, we can try that and see how it works. Or if you're more comfortable, just type a question in and I will relay it to Ian. So, but we'll, as Ian said, we'll give you a few minutes to chat specifically about challenges or issues with the reconciliation process. While you're thinking through this process, for those on the call, I will again shout out to Ann. She's working up against the October 15th final tax extension deadline. So we're glad she's here today, but I'm sure it's been a tough couple of days to get everything done.
It's the price you pay to take tomorrow off.
Any particular questions out there as you're reconciling your own books or challenges you're finding?
Well, it looks like I'm that good, I guess.
Good to know.
So guys, next week on Thursday, we will be beginning to go into the expert side, and the expert side is a little bit more of the high level stuff. It's going to talk about journal entries. I know most people probably know how to use journal entries, but there is a right and a wrong way to use journal entries, and they get used and abused quite a bit through that process. You're going to be able to edit transactions on a super level, so we're going to work on that. We're going to also work on memorized transactions and creating rules. Obviously, memorized transactions are going to be really good when it comes to something that pays every month that's the exact dollar amount, like a car payment, or if you have rent, that type of thing. We're going to talk about voiding transactions. And then obviously we're going to talk about editing and customers and vendors, to be a little bit more specific, and cleaning that stuff out. So we're going to go back in the first week of the expert is going to be reviewing, the 3 buckets we've covered in the beginners so that we're ready. And then doing a high level entry class next week to go over some of the other areas we have. And then we only have 2 more classes after that to finish the expert for desktop, where we'll finish covering the rest of QuickBooks desktop and everything that it can do and include that most business owners are using. It's not everything under the sun. The software is massive and has so many capabilities. It's crazy. But it does give you guys a high level of what you can do in the areas you would really use. And then Steve, it looks like we might have got a question.
Yes. Do you want to read it? Do you want me to read it and you answer it?
Yeah, go ahead and read it for me.
So everybody that's not on the conversation regarding invoicing, if you use the Stripe platform, you obviously need an invoice in QuickBooks and not the Stripe platform, correct?
That is correct, but Stripe has a syncing feature in QuickBooks that you can sync the information in there and categorize it properly without necessarily having to create two invoices. If Chris, it's like somebody goes to a landing page and checks out on your website, you probably wouldn't want to integrate for that because that's kind of not consistent and kind of infrequently. But next week when we do journal entries, I can explain to you how you would do those deposits to track that income properly based on the platform Stripe and what it tracks for you internally. And that's going to come down to looking at reports from your systems that you're using, your credit card processors, your POS systems and stuff like that, and how you would enter that information in. Okay.
Maybe since we don't have any other questions, I'll ask, what is the Stripe platform? I'm not familiar with that.
Stripe platform is a credit card processor. It's a pay as you go type of thing. It's you can install it on a web page and people can check out like you could do if you used a processor like on QuickBooks Online. And that's just how he's taken payments from people.
Regarding reconciliations, if you have an open transaction in a prior year and taxes are done in that year, can you delete that transaction without affecting anything?
Yes, you can. However, I would do research to figure out why it's still there. Because if you have like a check that never cleared, that could be part of an open funds audit that you have to try to reach out to the person again to try to give them their money again, or you have to supply it to the state. But it could have been something as simple as it was just a duplicate and you only needed one of them instead of two. So yes, you can delete it. Yes, it's not the end of the world, but do your due diligence before you just delete something out of QuickBooks. It was a great question, by the way, Chris.